A joint account is convenient, but the rules surprise people fast. Before you open one, clear up the biggest myths. Joint doesn't mean you must split money 50-50. And it also doesn't mean every transaction needs 2 signatures. In most joint checking accounts, either owner can spend, withdraw, or transfer on their own, which also means one person absolutely can overdraw the account. Your half of the balance isn't protected from the other owner's actions, and disputes can get messy. FDIC insurance can increase, but it doesn't double automatically in every situation. Opening a joint account is mostly about both owners passing the bank's identity and eligibility checks. Most banks require both people to apply, and each person needs a government photo ID, like a driver's license or passport. Some banks also ask for proof of address, especially if your ID address is outdated. Minimum opening deposits vary from $0 to $100 or more. Age rules can be strict for minors, and a negative banking history, like unpaid overdrafts reported in consumer databases, can block approval. The smartest joint account setup happens before the first dollar hits it, because you're choosing how much control each person has. Start by picking the ownership type, since options like joint tenants versus payable on death change what happens if someone dies. Then confirm that both owners have equal withdrawal rights, because some accounts allow limits. Decide who gets debit cards and separate logins, and turn on real-time alerts for every purchase and transfer. Set overdraft rules up front, and agree on how private statements really are. The opening process is simple, but the details affect cost and timing. Online applications are faster, while branch openings can help if documents or names don't match. But either way, both owners must consent and complete the paperwork. Approval can be instant, or it can take a few business days if the bank needs verification. When you fund it, use the cheap method, an ACH transfer or mobile deposit, before you default to a wire. Wire fees can run $15 to $30. Test each person's access before you move bills over. Joint accounts work best when you assume full shared responsibility, because that's how banks treat them. Joint usually means full access for both owners, not permission-based spending, and an overdraft or negative balance can hit both people. Fees often come from simple misunderstandings, like missing a minimum balance requirement or having bill payments post before payday. Many accounts waive monthly fees only after direct deposit, and people miss the timing window. Have an exit plan, how to remove an owner or close the account before you fund it heavily. If either owner can spend alone, either owner can also overdraw you. So set alerts and overdraft rules on day one. BankingHub can match you to joint accounts based on how you actually bank and show the real dollar impact of fees and features for your balance. Links in the description.